$1.4 trillion. Not a valuation, a bill. That is what OpenAI has promised to spend on computing power over the next 8 years. And nobody is pricing what happens if that promise breaks. I'm Uriel on the BTG desk, and one of our top traders, Blessed, an entrepreneur who reads balance sheets the way most people read headlines, has been pounding the table on this for months. His thesis is simple and brutal. There's an AI crash coming that nobody is pricing, and OpenAI and Anthropic are not the future of artificial intelligence. They are the Alta Vista and the Lycos of it. Household names today, museum pieces tomorrow. And this week, over exactly 48 hours, the market quietly started proving him right. Stay with me, because there are 3 walls closing in on both of these companies at the same time. A price war that broke out 2 days ago. A debt structure that reads like the dot-com playbook with more zeros. And a ceiling on intelligence itself that almost nobody in finance is talking about. By the end of this brief, you'll understand all 3, and why the desk thinks the 2 most famous names in AI may never make it to their own IPO dates. Start with what just happened, because the timing is why we're recording this tonight. July 8th and 9th, 4 frontier-class models shipped in 2 days. xAI released Grok 4.5, a coding and agent model priced at $2 per million tokens in, $6 out. That is roughly 1/6 the price of Anthropic's flagship. 1 day later, Meta dropped Muse Spark 1.1, a million token context window, first place on the big professional tool use benchmarks, priced even lower than Grok. OpenAI scrambled out GPT 5.6 in 3 tiers and cut prices on its own middle tier roughly in half. And Cognition shipped a specialist coding model streaming 1,000 tokens per second on Cerebrus hardware for a fraction of frontier cost. Now here's the detail Blessed circled in red. Meta shipped Spark with API compatibility for OpenAI's and Anthropic's own software kits. Read that again. A builder can swap the brain out of their entire product by changing 1 line of configuration.
When your competitor ships a socket shaped exactly like your product, that is not competition anymore. That's a eulogy with a release date. Here's the structural read. Everyone calls this market an oligopoly, a handful of giants with control. The desk disagrees on the one word that matters: control. The capital barriers are enormous, yes, tens of billions just to sit at the table. But not one of these companies can hold a price. The moment anyone tries, a rival undercuts them within weeks. Massive barriers to entry, zero pricing power, that is not an oligopoly. That is a commodity market wearing a tuxedo. Steel, cement, chemical refining, industries where the product is interchangeable and the only competition left is price, grinding margins towards zero forever. If that sounds far-fetched for something as magical as artificial intelligence, run the tape back 30 years. Web search was the first product that sold access to knowledge on the internet. Lycos, Excite, Webcrawler, Yahoo, AOL. An entire industry of gateways, burning venture money, each one convinced it would own the front door to human information. Then one free product ate every single one of them. Ask yourself, how much did you pay for your last web search? Nobody alive pays a cent to search the internet. Intelligence by the token is riding the same conveyor belt, and this week's price cuts are the sound of the belt speeding up. Now the part of Blessed's thesis you will not hear anywhere else on this platform. Picture 3 horizontal lines stacked like altitude markers. He calls them the 3 frontiers of knowledge. The top line is everything. All knowledge in the universe. What created life? What sits inside a black hole? Call it God tier. The entire AI trade is priced as if these models are racing toward that top line, with no ceiling in between. That assumption is doing $1 trillion of work, and the desk believes it's false. Because there's a second line, far below the first. The limit of what humanity can safely be trusted to know. Weapons nobody should be able to design from a laptop. Attacks on infrastructure. Things that cannot be uninvented. Any model that hands that capability to 8 billion people is a model no government on this planet will allow to ship. That line is not theoretical. It is enforced, and we just watched the enforcement happen in real time. More on that in 90 seconds. And there's a third line, lower still, the frontier of knowledge most people actually find useful. Be honest about what the average user asks an AI to do. Write the email, build the app, summarize the report, make the image. Today's models already do nearly all of it. For the everyday economy, good enough arrived some time ago. Here is the punchline that breaks the growth story. The models don't get to race to the top line. They settle into the narrow band between useful and safe, pinned from below by what customers need, capped from above by what regulators allow. And a product pinned inside a band is a commodity by definition. The exponential story, the one every valuation depends on, dies in that band. Proof we've reached the upper line? Look at the last 30 days. Anthropic built a model called Mythos and then refused to release it broadly. Its own creation, judged too capable in cybersecurity to hand out. The public got Fable 5 instead on June 9th, and only after new safeguards were bolted on to block the dangerous lanes. Then it got wilder. Days after launch, a Commerce Department export control order forced both models offline, worldwide. A US government order switched off a commercial AI product across the entire planet, and it stayed dark until July 1st. Let that sink in. The release schedule of America's most advanced AI company now runs through Washington. That is what a hard ceiling looks like from below. Every future leap in capability now needs a regulator sign-off, because every future leap lives closer to the danger line. The era of shipping a miracle every 6 months, the era these valuations were priced on, is closing in front of us. So against that ceiling, look at what OpenAI owes. First quarter of 2026, the numbers that leaked out. $5.7 billion of revenue, $9.3 billion of operating loss,
$3.7 billion of cash burned in 90 days. Fortune reported the company's own plan, stunning losses through 2028, then somehow wild profitability 2 years later. Internal projections show 2026 losses landing near $14 billion, roughly triple last year. And the company's outraising as much as $100 billion more just to keep the lights on. And stacked on top of that burn, the $1.4 trillion in compute commitments from the Open, with $665 billion of it due by 2030. Who funds a customer like that? Bloomberg mapped it, and the answer should raise every hair on your neck. The suppliers do. Nvidia committed up to $100 billion into OpenAI, which spends it on nvidia chips. AMD cut deals worth $200 billion and handed over equity warrants to its own customer. Oracle signed a $300 billion cloud pact. Analysts have now tallied more than $800 billion of these circular arrangements, vendors financing their own demand, cash looping between the same handful of names. If you traded through the dot-com era, you've seen this movie, just with smaller numbers. Follow the chain. If growth misses, OpenAI can't pay Oracle. If Oracle's contracted future doesn't show up, the market reprices nvidia, one of the most valuable companies on Earth. Blessed's read is colder still. A company drowning in obligations isn't even an attractive rescue. Nobody wants to buy the debts. Remember MySpace? News Corp paid $580 million for it, then let it go for $35 million 6 years later. And MySpace at least had no trillion-dollar tab. The desk's base case for OpenAI is not acquisition. It's the slow fade into a case study. Anthropic is the harder call, so let's be fair before we're brutal. Revenue run rate of $47 billion as of May, up from around $10 billion a year earlier. A $65 billion raise at a $965 billion valuation, briefly the most valuable AI startup on Earth, and a confidential IPO filing on June 1st. On paper, the strongest books in the industry. Now, the cracks.
Fable 5 is priced at $10 per million tokens in and 50 out, double their own previous flagship, the most expensive pricing the company has ever listed. In the same week, Grok started selling comparable coding ability for 1/6 of that. Then July 7th, Fable was scheduled to leave subscription plans and go pay per token.
The community pushed back hard, and hours before the cutoff, Anthropic blinked, extending access 5 more days. The desk reads deadline extensions one way. You do not blink like that when demand is beating your forecast. And Anthropic carries a burden OpenAI doesn't. It built the cage itself. Its founder spent years, loudly, publicly, warning that this technology could end us. Noble, maybe, but you cannot spend years telling Washington the product is dangerous and then act surprised when Washington treats it that way. The company that shouted loudest about the ceiling is the company now pressed hardest against it. Highest prices in a price war, tightest leash in a regulated race. So the endgame the desk sees isn't death, it's absorption. Amazon and Microsoft are watching a generation of builders treat their clouds as an afterthought, and a frontier brain welded permanently to AWS or Azure may be the only defense either has left. The $965 billion independent story quietly becomes a line item in someone else's annual report. Alive, but extinct as a company that answers to no one. Now, the desk doesn't ship a doomsday call without hearing the other side, so here's the strongest version of it. The bulls say demand is real, and it is. $47 billion of run rate at Anthropic didn't come from nowhere. They say frontier compute is genuinely scarce, so locking in capacity years ahead is strategy, not desperation. UBS went out of its way to argue this wave of vendor financing is not a rerun of past bubbles. Fair points, all three. But notice what the bull case quietly requires. That today's leaders stay meaningfully better than everyone else forever, and can charge for the difference. That's the exact assumption this week broke.
Demand for intelligence can be infinite, while the price of intelligence goes to zero. Ask the search industry how that combination worked out for everyone who wasn't Google. Real demand doesn't rescue you from a commodity curve. It just decides who gets to lose money at scale. So what do you actually do with a call like this? These are private companies. There's no ticker to press. But the loop has one public pressure gauge: nvidia. The desk is watching it as the bellwether of the whole circular structure. The first renegotiated compute commitment, the first missed data center milestone, shows up there before it shows up anywhere else. Levels to watch, not advice to take. If you're building on these models, and half our community is, the play is simpler. Stay model agnostic. Structure your stack so the brain unplugs. This week proved the swap is already one line of code. Make sure your product can cash that in when the price war comes to you. And if you happen to hold paper in either of these names, waiting on an IPO, the desk will just note that secondary markets exist for a reason, and that there is a real non-zero scenario where neither listing ever prices. That's the call. A commodity market wearing a tuxedo, a $1 trillion tap, a government ceiling, and two giants priced for a race that may already be over. Blast made this read months ago. This week, the tape started agreeing with him. When the first crack shows, a renegotiated commitment, a slipped payment, a quiet pivot, we'll cover it same day, right here. If you want that brief when it drops, subscribe and turn the bell on. Nothing tonight is financial advice. It's one desk's read of public numbers, and we've shown you where every number came from. Trade your own plan. We'll see you at the next brief.